I'm going to do a price action review for NQ. So let's start off on the weekly time frame. We're bullish. This shit's going up, clearly. We have this weekly candle, swept that low. Our draw on liquidity is the high. We see candle 1, candle 2, candle 3. That's this week. Let's mark out our range. Alright, so there's our weekly ranges, and we can see the key level for this was the rejection block right here. So we have this rejection block as our key level. You can see we're in a high time frame uptrend, right? So we use down close or bearish candles as our range candle. And a key level on the same time frame as the range. So you have this candle resting right above a key level, and then the second candle, candle 2 last week, opens up turtle soups on Monday, the Friday range, and the objective was complete on Wednesday. So let's see here. Let's mark out the candle. Let's go to the 4 hour. This was that high of Friday. The low was swept here. False break, turtle soup. We have a 4 hour order block that gets created and respected, so that's a strong bullish sign. These huge wicks down in here. I low-key want to go on NAS 100. Alright, so basically it's all the fucking same, right? You got the idea that we just went through on this, but this is the real 4 hour chart that we want to be looking at. Same key level I had marked out here. Alright. Inverse fair value gap. We use it as support right here. Move up to the 50%. You see that causes a retracement after we get inside of this premium imbalance, FVG. We get a reaction. Sweep this low right here. That's a turtle soup that happened on the 1 o'clock candle into this imbalance. Price is still breaking highs, rejecting lows, breaking highs. We're bullish. So then we get into Monday, 9 a.m., 5 p.m. candle digs into this breaker, which is also inside this fair value gap. The high that broke this low, it's a breaker. Use the closing price. And then let's look at today's price action. Now that we have the stage set, we're going to mark out our candles. 5 a.m., 1 a.m., 9 a.m., 1 p.m., and the day at 5 and 5. So there was our today's candle. Now if we look going into the 9 a.m., what do we see? Well, let's go to the 1 hour. Asia's session opened up right here, right? 6 p.m. and we fucking dumped. Probably because the Trump inauguration hit the key level. So we already moved down pretty significantly. And we can see, if we mark out Monday's range, here's the low of Monday. Let's get rid of this. Clean things up a bit. So we have Monday right here. So with the high time frame in mind, right? With all this in mind, and now we're bullish, and this is our main draw on liquidity, the high. If that's our main draw on liquidity, then we want to buy below lows at key levels until the objective is reached. So we have Monday. You could have bought below here, but it was at a funky time. So, I mean, I doubt many people really got that entry. Regardless, Monday's being used as the range for the day. We can mark out the 50%, and you can see the reactions that we're getting on that 50% level, which confirms this is the range in play. You can see we break above it, retest here, retest again, break below it, bounce off of it here, wicks, one more time here. So it's consistently being used to mediate price between premium and discount. Now, if we move down into the 15-minute time frame, let's mark out the other important pieces of a trade setup. We've got midnight. Midnight opening price is right here. All right. So the whole premise is that on a bullish day, you want to sell or buy below midnight. And for bearish, sell above midnight. So we've got these equal highs here, right? Going into 9 o'clock. And the low of the 1 a.m. range. So the whole time, the 1 a.m. candle, 1 a.m. to 5 a.m., and then the next candle, which is 5 to 9, opened up and continued to trade inside this range. So this is the full, you could see, this is one-sided price movement straight up to the high, and then chop. So let's see what happens as 9 a.m. opens up. All right. So 9 a.m. opens and immediately takes out the range high at 9 o'clock. You could have shorted from here as a Model 1 order block, targeting the 50%. That is a possible entry. I did not take that because ultimately we're in a bullish trend, so I'm not willing to take, and we're real close to the drawn liquidity for the day and for the week. So I don't really want to be taking shorts, so I'm not taking that. There was also not much displacement. I want to wait for volatility to enter the markets around 9:30. That's when New York opens. Nonetheless, we want to see a dump below this low before reversing price to the highs. So we wait. There could have been your entry right there if you were going short, counter trend. Takes out the 50% and the low. So right about here, let's go into the 1 minute time frame. So now we're dumping below these lows. We get an instant close above. This is where I took an entry. This was a loss today. Looking back, well, first let me show you. We entered, stop loss was below here, stopped out. Now what can we learn from that? Let's go back to, so this was the entry that I took today. It was a loss. We had this 5 minute fake market structure shift turtle soup. And it didn't close below this low. It wicked below it. Most of the times, like to me, I saw that and I wasn't really paying attention enough where it was like, I thought that was necessary, but looking back, it definitely was. We also, this 5 minute candle did not close above here to create a true 5 minute order block. But from here, why didn't we take an entry all along this, right? Well, for one, this dump down, nobody was going long here yet. Like, nobody got stopped out. If you were just looking from this part right here, and you were like, oh, I'm going to go long right there. Well, this low didn't get taken out. And if you started buying, like nobody was buying long here and then got stopped out. But then you get this. So people are buying, putting their stop losses here and here. You want to wait for that manipulation, strong manipulation down. And then ultimately, if we keep playing, notice how we have, this is the true turtle soup right here. Now, why is that? We have this consolidation, equal lows right here, a big dip into the low, stopping out everybody. Stopped out people here, stopped out here, here, and ultimately touched the low of the range we're trading right here. Or actually the whole fucking Monday's low was right here. If we look at the 5 minute, it's a close right here. This closed below the range, so it's a false break. That's your fake market structure shift. That's your turtle soup. Entry on the 1 minute. There's no real entry model here. So what would I wait for? I would wait for a Fibonacci retracement to the 50%. To get your entry to go long. So let's see if that plays out. Okay, so we go up a little bit higher. We're going to wait for the retrace to start. So we got displacement here after the turtle soup. Right here, see, this one, you didn't get the close below the low. There wasn't enough displacement through here. It just kind of stagnated. But here, big dip below, instantly rebalanced, and then broke market structure right here. So we have a market structure shift. We still haven't gotten a good retracement, so we're going to continue to place that higher. So right there we got a dip into equilibrium. That would have been a good enough entry. Enter right there. Stop loss at the low. What is your target? First of all, it would be the 50% of the range you're trading. Well, to be honest, now looking at this, the high I got took here. 50% doesn't really give you a good risk reward. I would probably be targeting the high of Monday's candle, simply because this big wick down, huge expansion leg, huge manipulation. I'd be wanting to see this take out Monday's high before anything, before I would even take profit anywhere else. We can also do our standard deviations. All right, from the bottom of the manipulation to the top, and you can see the first standard deviation ends up right at this high, this liquidity pool. So all this, this, and this. And then ultimately, the high of the, what is that, Monday? Yeah. So no, that's the high of the week. This is Monday. The final weekly objective. You get the 2 and 2.5 standard deviations from the manipulation leg. So then let's see how price develops from here. Alright, so we touched the 50% of the range. Don't know if I'd be taking profits there. This is a real choppy day though. A lot of people getting stopped out, constant stop hunts here. 5-minute time frame. You can even see on the 15, that turtle soup, 15-minute turtle soup, closed above. So if you were trading the 15-minute time frame, this would be your order block. So there's all different types of whatever your risk tolerance is. These are all the entries you could have had. That would give a pretty awful risk reward though. You'd be risking almost 100 points. It's like a 1-to-1. Nobody would want to be taking that. Regardless though, it did give turtle soup, order block, we take out these highs. So this was at the first standard deviation, so we can expect some kind of retrace here, especially also because the candle has closed. We're moving now into the 1 p.m. candle. Oh, so we took out the high right there. And that would have been, that's the price action for today then. Let's see how the rest played out. Yeah, and that was the end of the day right here. So next objective, pretty obvious. We have the weekly high here, and then these highs as our next draw. Kind of a lengthy breakdown. Hope some of it was insightful. I'm going to continue doing these because they help me. I mean, honestly, this is kind of like my personal journal. You guys can watch if you want. I don't really care to make these short or long. I'm just kind of talking and doing these reviews. So yeah, I'm out.